Okay, how's it going, Tycoon? So for today's video, super excited. We're going to be looking at ticker symbol QS. That's QuantumScape. All right. Um, this one is looking very good. Okay. One of the admin members in the trading Discord went ahead and brought it to highlight and bought some shares, did some share call outs, and man, it is looking good. As you can see, it was a beautiful call out, beautiful timing. Shares are almost up 14% on the day, on the last trading day here, which is beautiful. However, we like to look at options. So I want to show you guys some debit spreads, okay, that I think will be very, very juicy, okay? But before I do that, I want to do a couple more things, okay? So we're going to give you guys a breakdown. All right, in blue here, we have highlighted the daily gaps, okay? We're looking at the daily chart, and these are gaps on the daily chart. These gaps tend to fill about 90 to 95% of the time. It's just a matter of when these gaps are going to fill, all right? And then we also have another daily gap right here to fill that has not been filled. Okay, so that's two daily gaps we have to fill. And in this gray box right here, this is what's known as box consolidation. This is what's known as trading sideways, okay? So as you can see, stock ran up big, okay? It fell down, it traded sideways, fell down, and now it's been trading sideways again, and it's trying to come up, okay? Let me show you two of the things that's helping it come up right now, okay? Or one of the things, all right? What we have is called hidden bullish, or just bullish divergence, okay? So as you can see here, we had our low, and then the stock made a lower low here. But on the RSI, we had our low, our lowest low, okay, was right here. And then higher low, higher low, higher low, okay, to this point. So from here to here, the stock went down, made lower lows, but the RSI made higher lows. And if you notice from this point on, the stock, okay, I'll draw a trend line here just so you can see, the stock has not come down to this level, has not touched it since then. Okay, so we'll zoom in from there, has not touched this level since then, it's gone nowhere but up, okay? And the reason it's doing that is because it had the bullish divergence, okay? So what we could look for on the RSI, since we have this bullish divergence, is we can look for this bullish divergence trend line as a possible bounce zone, okay? So we could say, all right, well, you know, if the stock does fall, all right, we know where the RSI has some strong support from that bullish divergence, okay? So we can say it might bounce here in this bounce zone, all right? Now, more recently, I want to show you guys, we have a little bit of some bearish divergence, okay? So the stock made a high and then a higher high here, but the RSI made a high and then a lower high here, okay? That's what's known as bearish divergence. So we could see some pullback in the short term in the next couple trading days off of this bearish divergence, okay? Now, this doesn't have to happen. This is just an indicator of some bearish divergence. So the bearish divergence could continue and the stock could try to make higher highs and then the RSI could make lower lows still. It all just depends, okay? So what I want to show you guys is how to read it, basically, okay? So this is our bearish divergence. This could be a rejection zone, okay? So if we fall back down and we come down here and then we start to rise again, we could see a rejection here because of this bearish divergence and we could fall, all right? However, if the stock continues to go up in price, okay, and let's say the stock is trading somewhere over here now, all right, and we're up, we're trading above it, this would be our new support level, okay? Because this would be our bearish divergence and we would use that as support to keep the stock going up, okay? And once we go below it, then it's back, then that bearish divergence is affecting it, okay? So hopefully this is making sense to you guys. Just trying to give you some insider info and look, be able to read technicals and read things and how they're affecting the chart. Because if you can see these and you can chart them out, then you can know, okay, hey, this is a possible bounce zone. This is a possible rejection zone. If we don't get rejected here and we're trading above it, okay, then this would be a new support for the RSI, all right? We're in this box consolidation, okay? So as long as we don't fall below here, we're still in this box consolidation. We're just bouncing back and forth. As soon as we break above here, we're out of this box consolidation, okay? All of these white lines right here are going to be resistance levels I have drawn up. Okay, these are what I think are some strong key resistance levels. All right, now for what you guys really want. Let's get into the spreads. Okay, so there's two spreads I'm going to show you guys that I want you to take a look at. All right. One of them is going to be more high risk, high profit. The other one is going to be less risk, less risky in my opinion. Okay, so we'll go to the less risky one first. So if we look here, this is our gap, our daily gap up to $40. Okay, so we're going to go to QS and we're going to pull up the option chain on Thinkorswim. All right, and we're going to go to February, the February 18th, 2022 expiration date, and we are going to go and do a debit spread on the 35 call and the 40 call. So we're going to buy the 35 strike and sell the 40 strike. Okay. Let's change this to 1 real quick so you can see how much it is per contract. All right. So our max loss on this is going to be $101. That's what it's going to cost us to do this trade. Cost of trade including commissions is $102.30. So it's basically, you know, $100 investment. Okay, there's going to be the most you can lose if this play does not go right. If by February 18th, 2022, if QS is below $35, or here, I'm sorry, your break even on this, this is nice how they give you this. Your break even is actually 36.01. So 36.01 is the price that the stock needs to be above for this play to be in profit. As long as this play is in profit above, it will be in profit above 36.01. Okay. Now, saying that this is conservative is this has, you know, about 5 months of for expiration date on it. Okay, so it's got plenty of time, and all we're doing is we're looking to get this gap fill. Okay, so what that means is that when this stock, if this gap fills before February, okay, we're gonna plan on selling it. All right, and we're gonna plan on selling it because our price target is this 35 to 40, and there's a 400% max profit potential. And if this fills and goes to 35 or 40 before then, most likely we will get 50 to 100 to 200%. Okay, you get the more percent the closer to the expiration date that your contract is. So if you know, if we're in the end of January and QS is trading at $45 a share, you're going to be very close to your max profit versus if it's the middle of November and QS is trading at $40 a share or $45 a share. Your max you get closer to the max profit the closer the expiration. Okay, but if you line up your spreads with high profit with 400% profit plays, then you can easily get 50 to 100% on them, as long as it hits your target sometime between the expiration date. Okay, now a more aggressive one, okay, would be this gap fill up here from 74 up to 84. Okay, what I like for those is the January. Real quick, I want to show you guys too. So for February, the strike prices only go up to 45. For May, the strike prices only go up to 40. Okay, for January of 2023, they go back up to 90. Okay, now if you look here for January 2022, this is the only month that it goes up to 90. Okay, December, you can do that. All right, but I basically just wanted to show you guys when you go into the next year, these ones right here, January, these February and these Mays, I think it's kind of interesting how they don't have strikes higher than like 70 or 90. Okay, and the reason I'm saying that is because this ran up, okay, from 11, okay, to 132 in January. Okay, and basically from October to the end of December, okay, this thing went up like 1,000%. Let's look at how much it went up. Sorry, I'm just doing this so you guys can see it real quick. All right, so over 1,000% the stock went up in about 2 months. Okay, so if you think that QS may repeat this pattern, okay, because patterns don't have to repeat themselves, but they do have a tendency to repeat themselves. So if you think that this stock could run up massively from this winter up until January or February of next year, what you can do is you can go to this January contract and you can go and you can do the 70-80, and we'll click vertical here and we'll change this to the 80. All right, and we'll go hit one of these. So it's down to 1. As you can see, it's cost $8.30, $7. Max profit $993. Okay, if QS is at $80 or above by January 21st of next year. I mean, that's insane. That's 1,000%. I mean, put in $7, get 1,000. Come on now. Ridiculous returns. So if you think that some of these plays have potential, okay, that QS may go on a crazy run, why not enter a spread like this? Okay, where for every $7 you have a max profit of 993. So if you turn that 7 into $100, I would be very happy with that. Okay, I don't need to chase the whole 993. Okay, if I bought 10 of these contracts, okay, maybe I'd sell 5 of them at 100. Okay, maybe I'd sell 5 of them at 50. Okay, or 5 at 50, 5 at 100. Maybe I sell half where I want to take profit at, and then I leave the other half. Okay, and see where that can go, where that can run. Because if you can sell half of it, half of your contracts for 100%, that means that you made all your money back. Okay, so if you put in $1,000, okay, and you made $1,000 on half of it, okay, so you made $500. You could take out that $500, okay, and leave. Now you only have your $500 in profit is what's left in the play. Now you're break even. Okay, now you have $1,000 cash, okay, and you have $500 still left in the play. All right, so you're break even, and now you can run it up. You can see, okay, well, maybe I can turn that 7 into 200 and 300 and 400. Okay, now it's at 300. Let me sell one more. Okay, now we're at 500. Let me sell the rest. Okay, you don't have to sell everything all at once. Okay, but you don't have to chase the max profit either. Okay, it's about finding a good balance, setting your profit goals before you make the trade. Okay, I'm gonna enter this trade as 1,000% possible max return. I want to take profit every 100%. Every time I get 100%, I'm going to sell some. Every time I get two, and then it goes to 200 to 300, and I'm going to sell some until I have, however many have remaining, and I make my choice. Okay, do I want to hold these last couple and see if I can hold it through expiration and get that max profit, or do I want to close this trade and move on to another one because this has been a successful trade? So let me know what you guys think about that. Let me know what you guys think about these debit spreads. Do you like these videos? Let me know in the comments below. Don't forget to like and subscribe, and the link to join our Discord will be also in the description as well. That's definitely well worth it.